Oh, good morning, guys. How we doing? Should zoom in more on my face. Hmm, it's almost better. Okay, feeling small. Ooh, well, that's fancy. Good morning, Jen. Last week felt kind of crashy. Well, yeah, but only because you're like delusional, right? Yes. Excellent. All right, give me your tickers. I got fucking jaw surgery, or well, mouth surgery, jaw surgery on Friday. So I can't do a lot of talking today. I'm gonna make it nice and quick. I'm loaded up on painkillers right now. We're gonna power through, and then I'm gonna fuck off. That tooth they fixed? Yeah, so the problem was more complicated than originally perceived. But I think it's all sorted now. Alright. Beyond, hold on. Let me make these nice and neat. Beyond GME BAC. Carvana. What about Carvana? Carvana butterfly ideas? End phase. Ew. Alright. Do you think shorts on Beyond are hoping it goes bankrupt? Probably. That's usually what shorts hope for. I feel like they could be very right. No. We could talk about LRCX. Does it look like Carvana will be neutral for the next few weeks? We'll take a look at Carvana since $30 shorts weren't enough for you guys. Greedy. Netflix? Sure. Yeah, no problem, man. The painkillers only help for like an hour or so, and so after that, I'm, my talking is gonna get a little weird. TLT? I mean, do you just want to discuss rates, or do you want to actually like look at TLT? You know, TLT is not driven by its options chain, right? I'll put it on there, but the information you get from that's not going to be very useful. Is that it? It's a short fucking list. MDB. Oh yeah, I wanted to take a look at that again this week. Could. Okay. It's like two people naming tickers. All right. That's it. BBAI? I'm not sure I'm going to be able to get you anything on that, but we'll check it out. Alright, let's start with Beyond. So, Beyond's still trading below the theoretical bottom of its options chain. Vol's starting to turn around on it a little bit. Not super liquid right now, so that could be a good sign. Uh, and 350 is broken, but not 4 to the upside. Let's go take a look at its options chain. Boop. Alright. Well, total net gamma is starting to increase. It's almost positive. Delta's almost positive as well. DN is falling rapidly, like 2% a day for the last several days. Let's see. So 5, 8, 4, 2, 2.5, 2, 1.15. Gamma neutral's turning up, and VN is coming down towards $6. Yeah, this looks fairly bullish. Doesn't look like it has a lot of room to run above 5, although if it gets above 5, it could actually get out to like 750 or 8 maybe. I wouldn't make any bets that were higher than $5 though, because this is getting out here is really difficult. It's going to be very hard to get past that big wall at $5. Oops. Let's take a look at Vol. So volatility is starting to rise out on the 60 and 90 day, the longer dated positions. IV30 spiked up a bit last week, but it fell down on Friday. Looks like it dropped. What is that? About 15 points on the 30 day. But IV10's still picking up. Yeah, see, it's got to get past this, like, the shitload of negative gamma. If it did, it could rocket. But getting past this is going to be a nightmare. This is actually really similar to how Bobby was when they were starting to head towards bankruptcy. and that you got this fat fucking wall of sold calls that just crushed gamma like above $4. But then when it did break out, it just fucking rocketed all the way up. So this, yeah, I mean, the setup's good, but it'll be very hard to get above $5. I would be careful playing anything higher than that. And since you want, like, you would want exposure to a really small move, 350 to $5. You might even want to be at like 4 or 450, and maybe with some like theta or something, so that your profitability scales a little bit better. Bullish to 5. All right. What was the next one? GMA. Take a look at GMA. GMA is consolidating upwards and still is continuing to mostly just trade between the two largest strikes at like 30 and 28. Sometimes it gets a little bit of an edge above 30, but not very much. Starting to get a little bit illiquid, but we're not seeing the effects of shorting. Arbitrage. Still a little bit positive going into Monday. And vol turning up. So it looks like it could push up a little bit more Monday. Let's see. Gamma's starting to get pretty flat to the upside. See, this is why it's chopping. You see that like gap up in the gamma? So the shorts get it down to like the 29 where they can short it. And then the bulls like kind of get it back up above 30 where they have support. And it keeps snapping back and forth between those two. It does look like there's a little bit of call interest building out to about 32. 33 to 35 is still a little bit dead. Volatility is not doing much on the 30-day or the 10. No. No, volatility mostly coming down over time, so still kind of bearish. A lot of calls out at 40. Those are probably net short. These are for April 17, Jan 17. So most of the 40s expire in January. I would say those are probably vol shorts. Some of the 32s between 1227, 117. So a lot of weeklies here. Quite a lot of weekly. It's like 2,800 on the weekly, 4,100 out on the OPEX expiry. Most of the $30 strike falls off on Jan, and since the $30 strike is mostly sold, if shorts don't get it back under like 25 by Jan OPEX, that short call positioning falling off could be an upside catalyst. But GME is still just pinned to Gamma Max. It's not really picking up any notable delta. Actually, total delta on the chain has fallen by about 300 million over the last week, which isn't particularly great. Some of that was just the OPEX expiry. It was like 100 million of that, but still another 200 million that fell off prior. The last high. Gamma's not looking particularly fantastic either. Although still much better than it was through like 2023. Yeah, so I would say GME looks like possible 32 to 35. Unless 28 is lost. Lost. More bullish. After OPEX. All right, next we got BAC. This will probably benefit from a little bit of normalization in rates, but its turnaround wasn't all that strong. Still plenty of room to continue filling that gap to the downside and back to like November levels, which were already overvalued. So just some of the like post-election FOMO into financials breaking down. From a technical perspective, I probably wouldn't long or short this. And this could be a bounce, but it could fizzle. The prior high at like 44.50 was a pretty important level, but we'll check out the options chain. So drop down, tested gamma neutral at the bottom there, bounce back up to test VN on Friday. Delta on the chain is still negative, but gamma is slightly positive, so you got a little bit more front weighting to the options positioning, so people piling into that bounce pretty hard. Can probably see that over here on volumes. Yeah, quite a lot of volume right here around like 42 to 45. If it gets back up above like 45, 46, it looks like it could run back up the chain to where that out of the money gamma got left behind. But let's see. Yeah, not a ton of delta on that positioning. So some of that's pretty short dated. Hold on one second. Why is that not working? There we go. Looks like June and January on the 45. Sold puts out to like 1/16/2026. So a decent amount of put sellers at the 35 strike there. 45 looks pretty bullish. These put sellers are coming in for June. Some of them in Jan. Not. Well, it's about equal. Jan and June. This one's a little further dated. It's a little bit more confidence in the 40 for later in the year. SCX QQQ or NQ? Thanks. Oh, well, if you want me to go over QQQ, I can. But we do SPX at the end always. That's usually like the last one. So yeah, pen. So this looks bullish above, confirm 45, 46 out to what, 50, 48. So 48, 50. Current range 42 to 44. Chop. Alright. End phase. This doesn't look great. Might be finding kind of a bottom. But usually these break down. They're not, it's not like super bullish out on the daily. I'd want to see like a breakout above 78.55 to move higher. This isn't well positioned for the incoming political party. So a lot of the bullishness on it is kind of lost. Looks like some puts for Jan at 70, 65, 60. But nothing further dated than that. So a very kind of a very low expectation. There's a little bit more expectation they'll stay above 65 and 60, but 75 is kind of shitty. The 70 is kind of shitty. So not a lot of faith. I don't think that it's gonna stay above 70 for very long. At least not in the options chain. I can see this falling back. It's a little bit of call interest coming in recently around 73, 75. So maybe it pushes up to that like positioning at 75 and then falls back post OPEX or after Trump moves into office. But yeah, it doesn't look great. It's kind of moving up to retest gamma neutral right now. Might break above test GN or VN and then fail back again as that shorter dated like put positioning falls off. So yeah, there's a little bit of bullishness here, but very little. Thank you, Mike, by the way. Um, um, Next up, LRCX. Yeah, so a little note on LRCX. I know not all of you get to watch the stream, but I closed my positions on it right after the FOMC decision dropped before the press conference. Because I was at about break even, and the dot plot looked really fucking bad. Now that it's fallen and found support roughly around the same level where it found support before, um, it could be slightly bullish on it again. Although I would want to probably see yields fall back, like the 10-year back under 4.4 or the dollar back under 106. Like a little loosening of financial conditions. I will say that the drop down to 70 was met with a shitload of volume. So there's definitely buyers at this like 70 level. This is a pretty strong support for them. They did rack up some debt over the last couple of months, which has hurt their share price quite a bit. And then also, all the delta falling off of the chain post split has not helped them very much either. But as that delta reaccumulates on the bullish side, it does have some potential to move upwards. Now, yeah, let's take a look at the options chains on it. Yeah, so you can see that the bounce Friday it kind of tested GM, it rejected off of it into the end of the day. This is in like all the semiconductor baskets. If indexes continue to turn down, the options chain here won't matter. It does look like fairly decent amount of delta fell off. But the delta left is slightly positive, so maybe some of those short positions that were on it closed out. Gamma, however, is still negative, which is not a great look. If it loses 70, things get pretty bearish. Back above 74, things will start to turn around, but you can see that the delta on the upside of the chain has kind of broken down a little bit. This was far more filled out just like a week ago even. So now that it's slipped into negative delta, yeah, it'll have to claw its way back above like 74 before I would be interested in taking a look at it. So right now I would say still bearish, but probably moderately well supported. It's a little bit of support at 68, 62, 61, and then back above 72. Ugh, get rid of that. That's from the split. IV out on the 90 days turning up pretty quickly. That might be like, let's see, 72 open interest on the call side is 117. And the put sellers are coming in same date. Well, a few further dated puts there. That's Fab at the 74 strike. March at 75. Feb, March, Jan. Yeah, it looks like there's a little bit of confidence over 75. So, yeah, I'll kind of stick with that. Yeah, and things loosen up for the meatball quite a bit above 75 there. Gamma starts to move pretty vertical on the positive move. And then it would, catch support around 79, 80. Still plenty of room to move to the downside though. Like 68. And that's why I'd wait to confirm at like 74, 74.50. So bearish. Down to 64. So index exposed. Bullish above 74.50. To probably about 80. All right, Carvana. So those of you that were in this, I mean, there's not much you can do. You can take profit on the butterfly. It's in the expected range that I thought it would fall to, like right there. So you could just take profit on it. If you're feeling more confident that it's going to stay around these prices, then you could wait out more profitability. The longer you wait, the more theta it'll decay off of that out of the money butterfly, and the more profit you'll get. But you risk, it moving really hard. There was a decent amount of volume on the bounce at let's see, it hit like a low of 218.45. I don't think higher for longer rates are particularly good for them, but that's not going to change their cash flow reporting, and it's not going to change their payment in kind. So while it's, the macro is bearish for them, they could still beat estimates and projections. As you can see, most of the really positive gamma fell off here. But things start to kind of calm down as it moves down below like 25, 20. So this range it's in right now could just kind of chop a lot before it finds a decent foothold in either direction. Um, Back above like 230 is going to be pretty bullish. If it falls under 215, very bearish. So it's definitely, and you can kind of see that here too in the gamma, is it's just kind of caught in this like little straddle. Uh, Greeks, I mean, still nowhere near delta or gamma neutral. Those are still pretty far to the downside. Although I don't think that the shift in delta was very bullish on Friday. It did pick up quite a bit of gamma. So somebody's buying like some short dated options, maybe targeting a small bounce back to the upside on that. Volatility on the 30 days, not doing too much. Let me go to the HV on this because it's wonky. But IV on the 10 is up. 60. Yeah, so a little spike in IV. We might see more short puts come in on it over this like next week. This next week's gonna be pretty shitty, but we might see some more like short puts come in, possibly where they're selling them here to the downside. This is Friday's volume, so see they're selling the 220. Looks like they're selling them for OPEX. The 215 even shorter dated prior to OPEX. Yeah, so they're selling a few puts here with the spike in vol. If they can get it back up over 30, then it could break back out to the upside again. Um, so Carvana bearish under 215. Bull over 230. All right, Netflix. Did Netflix even drop? Not much. Regained most of its drop Friday. It looks like there's still strong buy support at 900, 880. Um, yeah, so pretty strong buy support on Netflix at gamma neutral. Um, Delta's still kind of falling off on it and continued to fall off on Friday as well. But a little bit of short dated gamma picked up, moved from slightly negative to positive like 76 million. Um, Looks like it needs to get back above 915 to get bullish. And there's positioning all the way out to 1,000 on it, but if it loses 900 again, bearish. Very bearish. Down to about 880. So yeah, the 900 to 905 to like 880, that's a really quick drop. Getting below 880 could drop as far as 840 to the downside. 840, 830, like right in here. Um, but I would say 880 is going to be fairly supportive, as it was. And then anything over 915 is just like full bull. Volatility is still pretty elevated on it. Yeah. See how much gamma falls off under 900. So yeah, 900 down to like 840, but above 915, 980, 975. It's got quite a lot of range. That's what makes Netflix so tempting, although its price action tends to be really, really volatile. So, bearish 900 to 880. Sub 880 down to 840. Bigger range. Bullish 915 to 980. All of these are kind of going to be caught in the middle of their, because of the bounce on Friday in indexes, they're all going to be kind of caught in the middle of their positioning. What's up, Plato? Sorry to hear about your two situation. I'm 30 minutes behind, so if you've done all these, ignore. But I'm most interested in building 2026, 27 puts. Carvana, Tesla, Nvidia, Upstart. Okay. Hmm. That's going to be a longer projection than the stuff I'm looking at today. Speaking of Nvidia, that's next. So Nvidia did catch a little bit of support Friday. Oh. 980. Get that off the screen. Is this frozen? Hold on. Oh, there we go. All right. Sorry, that just crashed. Obviously, we have a distributive breakdown here. We've caught support at a fairly non-existent, non-existent prior support level. So this is an attempt at a bullish reversal from bulls that are trapped. This is really common on distributive price action. You guys have seen this a million times. You'll get this this last ditch effort by bulls to save the positions they got trapped in up here. Sometimes they're successful, sometimes they're not. I mean, this is Nvidia, so I would assume if they were going to be successful somewhere, this would be it. I'd be cautious. However, and I've looked at the options chain already on this, but short of a break of 140, Nvidia will remain bearish. So that 140 level here is going to be pretty important, and something to watch out for. But we'll go take a look at the options chain also. Yeah, so as you can see, 140. That's not right. Hold on, that's the wrong stack. There we go. So as you can see, like once it gets above that 140 level, gamma starts to get a lot more positive. I think it opens up that run out to like 150-ish or so. It is a little bit supportive here at 35, and slightly more so than it was on Friday, but a slip of 34, and it's gonna go right back down again. If we take a look here at the gamma, like you can kind of see that support there at the 34. That's pretty important. Um, but then yeah, 140 is key. This is where all the sold calls are. These go all the way out to February, so not just short dated, although there is some short dated interest on that strike. But the 134 support, pretty important. Then support at 130, and then really nothing down to 120 from there. If we look at the delta, most of that is still in the money here. And so not a lot of delta supporting a move to the upside. Definitely not as much as on the gamma. But again, a break of 140 and Vega exposure will pick up. Some of that speed picks up there as well. And, the increase in volatility can carry it out potentially like on a break of 140 out to like 150. So it is just at bullish support right now. At 134, a loss of 134 is definitely still bearish. Big spike in vol though, especially with Friday's move. I'd imagine IV10 actually got kind of crushed into the end of the day there. Holy shit. I went from like 50 down to 38 by the end of the day. Hmm. Okay, so bullish interest in the longer term, but not necessarily the short term. So this may still get another rejection before it sees a move higher. I'm not a big fan of this one. Ah, son of a bitch. Oh, there we go. Hold. Bullish above 140. Bros, why do you keep asking me about this every week, you two? Did you get like some sort of stock comp for being a Portland resident? Mm, hmm. I don't like the lower highs here. It's a bad breakdown in consolidation, and buyers are lower and lower on each test. So this is starting to megaphone a little bit on the daily. Probably a little bit too much speculative valuation there. Volatility metrics are kind of useless. Yeah, it kind of looks like Carvana before I shorted it. A lot of very close to the money support, but then nothing below it. Loss of 50s bearish. This would be like something that I would consider generally a fairly prime candidate. Yeah, all the delta's already in the money. This is something I would consider like a prime candidate for like selling calls or calls like bear call spreads on until it lost that 50 level, and then as that like support to the downside, like 55 is all OPEX, 5250 is all OPEX, 50s OPEX, well, sold puts are OPEX. So like post OPEX, all of this positioning is going to be gone near spot, and it's not till like 45. Yeah, 45 just on the call side. There's a little bit of interest out to like April and Jan of 26. But the sold put side is also OPEX. So this could easily retrace after the rest of this positioning falls off. Yeah, yeah. All the OIs like in the money, and most of it all expires in like a couple weeks. So I would say right now, probably you could hop on the bandwagon with these like IV 30, uh, or even like the IV 60/90 shorts that are starting to come in. But the IV 30 is starting to decline. So there's definitely gonna probably see some sold calls at like 55, maybe 60 coming in. This has really dramatic drops in implied volatility. Usually not a lot of lead time. So it looks like when the expirations hit, short vol just comes in and fucking crushes the vol. And then, roughly, let's see, August, yeah, roughly alongside their earnings cycle. So people are unsure about their future. They're bullish on them, but they have to keep meeting expectations. Um, I would say a drop to 50. Like, I'd be pretty comfortable selling like 57, 50, 60 calls here. And then any loss of 50 could drop down to like 43 or possibly even lower. Um, so yeah, slightly bearish, but stagnant until OPEX. I think it's VOD. Oop. All right. Vodafone? Ew. They have a dividend? 8.3%. I don't think I have options data on this. No, I don't. TLT. Okay, again, fair warning. TLT is going to be far more reactive to the 20-year, and not to its own options chain. So, technical analysis and stuff of this is kind of useless. This looks fucking terrible from a technical perspective. I mean, it's bear flagged for the last year, and now it has failed that bear flag. And I mean, the next target to the downside would be like 82, and then we're probably gonna go out to the weekly to find a lower target than that. But maybe like 80 after that. Potentially, given the macroeconomic conditions, this could just continue to fall. I don't see any good reason for it to turn around. At least not consequentially. So like it might get like a little bounce here and there. We might get some rate fluctuations, but I think over time the direction of TLT is going to be just down. at least until monetary policy changes or we fix our debt. Should gold pump in the coming weeks? No. Should continue. Arguably, gold should continue to fall off while the dollar rises and yields go up. I'm not bullish on gold right now. Fluctuations in the dollar will probably keep it fairly stable around 25 to 26.50, maybe 27. Um, but I don't think it's going to get like another big rally until real rates actually come down and the dollar declines, which could take some time. Or, a liquidity crunch in treasuries or something like that. Something, like crash catalysts. So this could be like a good entry point for gold. But I think you might be able to get cheaper prices. Like, so far it's kind of held this trend on the dollar lows, but I could see it falling back here to like 25.20. And then, maybe I would target like buy-ins in that range as, things kind of accumulate. But I think it'll be some time before we see the dollar decline rapidly. I mean, at least Jan, right, with the BOJ decision, but maybe longer than that, depending on how much they raise rates. What was the next stock? Oh, we were looking at TLT. So TLT bounced off of VN uh, on Thursday, but failed the breakout like almost immediately. There's a little bit of bullish delta picking up on it. Gamma's slightly positive. There's probably some participants targeting like a snap back to 90, um, which would arguably make sense. That's probably where the largest distribution of interest is. Yeah, it is. But most of that's just for OPEX. So again, I wouldn't read too much into the positioning here. It'll be more interesting to see where positioning comes in for next January. There's a little bit of 88 open call interest post OPEX, which is that might be kind of interesting. Is that some of this 91? No, not 91, but like 89? No. Yeah, it just seems like the 88. It's a little bit of post OPEX. Like the majority of the interest is the week after OPEX. Sold put confidence, not super high. Even on the 90 strike. So yeah, I mean, I think probably just continue down. The 85 level is well supported, but I mean, the options market doesn't seem to be extremely bullish on the upside there. Volatility turned up a bit, realized all drops. Yeah, more bearish below 87.50. Support it, 84 to 82. Break of 90, bullish out to like 93. So, although, like I said, it doesn't look like there's a lot of confidence in that break of 90. So I would say fairly neutral to, oh, shit. Did I get rid of my list? Fuck me. Alright. Well, you guys will have to screenshot the earlier part of it. Shit. MDB had Tesla period. Oh, that's right. MDB could Tesla and BBI. All right. We're in the Matrix. I just had to see where the shit was for this. All right, MDB. Yeah, that failed. That failed to bounce back. Which is kind of what I expected the last time we talked about this. I said I wanted to wait for like a lower low to go long. I will say that some positive delta and gamma did pick up on it. Let me pull up its chart here. Yeah, so failed to recover. Possibly a slightly higher low off of that breakdown. Let's go out to the daily where it doesn't look so shitty. But this last week or so was pretty detrimental for it following earnings. They did stay listed on the NQ100. I know a lot of people are targeting that move back up to like 370. It had built up a decent amount of put support, which you can see here. Like 240, and this extends out end of January, Feb. Some of this 250 open interest is pretty long dated. Even the 260 for Feb. So I would say it's got a ways to climb out of this hole right now, but the delta's to the upside. And so the move up is slightly advantaged, but probably needs to get higher than 260 to really do anything significant. So maybe this is something I would just watch and see if it gets back above gamma neutral, or at least tests gamma neutral. And if it does, that might be where I would look for some positioning. But I don't think I really like an entry down here very much. I can see how it would be very profitable if successful, but kind of unreliable. Yeah, it's at least there's not like a lot of downside left. I mean, yeah, you could technically go long here and cross your fingers, or maybe long with just a fairly tight stop. Can go back on the screen and send you it. Yeah, if you guys could like go screenshot it, or you guys can. Well, just it's just for your information. I don't fucking need it. Needs a move above 260 to confirm. All right, hood. Hood's about topped out too. Dropped out of 34. Oh, looks like it might continue to fail. 31's 31, 26, and 23 are downside supports. Plenty of positive gamma to hold it here for now, though. Volatility is still pretty elevated. Yeah, looks like some decent support around 37 for Janopex. 39, 40's got quite a lot of interest. Loss of 37 would be bearish. 37 and 35 would be the downside confirms. Loss of 35, maybe down to like 25. There's almost no out of the money delta. Seems like a pretty decent rejection. It just might retest Gamma Max before failing more. Might take like a couple weeks. So neutral at spot, I guess. Bearish sub 37, 35. Tesla. I don't want to do too much analysis on Tesla because it's probably just going to end up being wrong as the positioning shifts. However, we'll take a look at it. Broke the down to the 420 level where it does have support. It's not going to be super relevant here, but here it kind of matters. There's not a lot of support below 420. A loss of 420 could potentially see it spiral back down to 410, 390, 375 would be the downside targets. Loss of 420 to 410. Opens up. Downside P2s. And 410. 390. 390, 370. Bullish above 440. It's quite a lot of range on the risk. Yeah, I mean, I'm still kind of mostly of the mindset that I'd rather just stay away from this than fuck with it. But if it hit any of its major breakout or breakdown levels, then I might take a position on it. So, like, if it lost 420, that could be kind of interesting. But I might wait to confirm at like 410. And then the break above 440, I'd probably long because that positioning out to 500 is still there. And that has not a lot of delta, but it has some. Alright. Last BBAI. Let me see if I even have data on that. I don't. So I can just do technicals for you. Or I can take a look at the fundamentals, but this is just a odious sack of shit. Why do you care about this? Why would you touch this? It's just worth nothing and then occasionally worth 300% more than nothing. Tesla's its own market. It trades almost as much as the indexes. The options chain looks stacked. Yeah, with sold calls. Yeah, this is just garbage. I mean, sure, throw money at it, but you'll probably lose it. If the options chain is stacked above $4, I guarantee you it's all just short calls. Realized vol's already sky high right now. There's no reason not to short the fuck out of it. And it looks exactly like what they're doing. Like they shorted the $4.55 strike, and now they're shorting the 4. If they get it under, well, it's already under 350, so they're probably shorting the 350 also. We look at CNC. Yeah, here, if you guys want to screenshot this, the last of this. You'll have to go back earlier in the stream to get the rest of the list. And that's enough time. Alright. CNC. Healthcare's been getting beat up, especially health services. Uh, hmm. Net margins are kind of garbage. Is there like some sort of dividend that's attractive here? They're trading at a PE of 10, so they're probably bottom of the barrel right now. I mean, this doesn't look great, right? It looks like distribution, like over the long term. Like price is probably going to normalize somewhere to the downside. I thought it was dead cat bounce, if anything. Maybe. I mean, there's enough volume on the bounce that it's possible it gets some bulls piling in, but I don't think I have options data on it. Oh no, I do. Hold on. Yeah, I mean it's not very interesting, which is kind of what I thought. It was like all the positioning is near spot. It looks like somebody came in and sold a bunch of puts, like 55 for Feb, 57, 50, 60s getting sold out in Feb also. Yeah, I mean maybe bullish out to like 65 or so on a bounce. Although things start to loosen up there. Yeah, if it got back above like 70, that might be bullish. I mean, this is risky. I would even say like not even 65, like probably more like 62. Gamma falls off really steeply to the downside, even from spot. Like, it seems more like it's going to go back to 58, 55 than it is going to go up. Yeah, no problem. All right. Cool stuff. Let me see what the boys are up to while I can still talk. What's up, guys?
What's going on? We're just fucking around with Python.
Nice.
Yeah, touching butts.
Sweet.
Our butts are making a perfect plus sign right now. Our cheeks are like, enmeshed.
Stop it. That's
In a
gross. Don't
3D
drag me
surface.
into your weird butt stuff. Look at that dork. I got it to give me what I wanted.
Can you guys fucking hear him at all?
Wait, did you had to, how long did that take you to get that to make that?
3 more questions.
But it's still wrong because it's not a number. It has to be a number. Like it's still they made it a string still, so they
No, no, no.
forgot.
I told it to. I started it from being a string.
Oh, okay. Sorry, Girk. How you doing, bud?
It's all right.
How's chat? Is everyone all bearish?
No, no, not after the bounce on Friday. Fucking ripped everyone's panties off. Um,
Nah,
but
that bounce was no joke.
everyone's definitely a little skittish. That was a weird
I,
bounce, man. Do we want to talk
I,
about the crime in the order book?
well, this is the most volume that
Do
Spy
we?
has had, and this is the most volume Spy has had since April.
Yeah, that sounds about right.
And in April, the market dropped 3% in a week when we had that much volume. So, just little tidbits.
We dropped 3% in a day last week.
Yeah, we did. Yeah, I know. Yeah, that was crazy. And we had more volume on Friday though, at least on Spy than the drop. But that just goes to show that there's some disagreement between buyers and sellers or something like that.
Yeah, I mean, I'd be interested to see, obviously, how it continues going into Christmas. Volatility, I mean, big down, big up is part of going down. That's just the nature of it. So I'm interested to see, is realized vol actually going to start crushing, or do we just see more chaos?
Yeah, I
It's too
think.
soon to
Yeah.
tell. You
Yeah,
have
I
one day of
agree.
down, one day of up. It's like you don't really know. The only thing I really know is that we didn't go up as hard as we went down.
Well,
Do
dude,
we
that was
have
like an
some?
epic rescue attempt for OPEX. That was crazy.
Yeah,
It
it
was
was, and
purely a rescue mission.
but it was also like it also got rug pulled way before the peak of its realization. So that 6,000 strike was key.
Yeah.
They did save a lot of positioning at like 59.75, 59.50, but that shit was old. Like a lot of that had already been pulled back when we were trading like above 60.30. Um, and most of the stuff that had been levered up over the last couple of weeks was all still at 6,000. And so that shit just got burned up. Do we have any
Yeah, I think
oh sorry, go ahead.
no, go ahead.
Do we have any figures, JFresh, on what the total amount of delta and premium that fell off with the expiration is?
I do, but you'll have to give me a minute
Okay,
to.
Well, I can just
Me and
look,
Dork can
right?
bullshit about
I'm
stuff until or
I'm pretty sure. Well, in terms of delta value that
Dorcas should
dropped
have
off,
it too. We can
it's
compare.
yeah, about 1.5 trillion fell off on Friday of just delta.
Yeah,
OI
I think it was
contract
something
value
like
about like
200 billion in contract value out of the
uh
trillion.
180ish, yeah, 185, something like that.
Yeah.
So yeah, bunch of
You,
delta fell off the chain.
are you pulling this from Dev or NPR?
Yeah. Looks like put
Nice.
leverage tanked, but call leverage
so
really
185
has
to
been
200
tanking.
billion in gamma?
No, no, no.
No, just
Oh,
In
delta.
contract
Oh no,
value.
contract
oh,
value.
contract
Yeah,
value.
sorry.
Yeah, so it
Yeah,
went from 953 to 777 ish
yeah. But
billion.
the call leverage has been tanking, which is really interesting.
Oh yeah, call leverage. So you don't have this much previous information, Dork, but call leverage is now as low as it was in like October 2022.
Holy shit,
So
that's exciting.
yeah, I don't know what it means, but it gets the people going.
It means it's almost time for calls. Is what it sounds like.
Yeah, I mean, put leverage is still very high.
Yeah,
Call leverage is collapsing.
Do we see any gains in put delta?
Yes. So, obviously, put delta rocketed. Um, when we
yeah. It
dropped.
almost doubled. It almost doubled on FOMC day.
Yeah.
Yeah, it went from like 1 trillion to 2.22 trillion and then kind of hung out there. And then on Friday, only about what, 700 billion expired in Delta. But
Okay.
it's still, but we're still 500 more billion in Delta than we were before FOMC. So it's still elevated, but a lot of it fell off. Now, that being said, a lot more is falling off from the calls because it was all call. I mean, most of the Delta was in calls.
Yeah. Hmm.
Yeah, let's see how. I mean, it's going to be interesting to see how the repositioning shakes out.
Yeah, I mean, like Friday, I made kind of like a pretty awesome decision right before I left the stream, and I picked up some puts that were a bit out of the money, and I hedged it off with like some out of the money calls because I wasn't sure if the positioning was going to continue to bleed, but it looked like the once in the money puts that the bulls were sitting on had started to claw back pretty quickly at our high test, and that's what ultimately like rug pulled us into the end of the day. Is they just pulled all that support away, and there were no calls left. Like right after we dropped, I noticed that like that call delta just disappeared, because all of those once in the money sold calls that were providing us all that juicy charm up at like 60-50 were gone. um and so they pulled all of that shit back on that drop. They closed everything out that they could, because they got like that, like basically like little flash crash to exit all their positioning on. And then now that we're trying to move back to the upside, it's a lot harder without those sold calls there to support each level. And so once the bulls pulled the puts away, just it's just gonna like, and so I'm thinking like how much put delta is falling off at the OPEX, because that's also going to be gone come Monday. And I don't see us stabilizing here without those positive, like without that positive charm. This is a weird scenario because we've always been like, up until this point, really. I mean, this in August maybe. Um, we've just been sitting on massive piles of in the money sold calls, and that positive charm, helps bulls stabilize and leverage up. But
Oh, sure, yeah.
without that positive delta and positive charm holding things up, I feel like we're in a really weird spot.
Yeah, I think going forward, higher vol is in the cards.
Yeah.
Yeah, that's.
So,
I mean, it's
are
we're
you are
below GN
you
still, right?
are you bullish on Tesla and Nvidia?
Me?
Yeah.
No, I just went over both of them. I don't think either one looked all that good. Like, they're both kind of sitting at their last vestiges of bullish support. So they could, right? Because of the bounce on Friday, they kind of regained, like they pulled back out of those like more bearish levels. But I mean, if Tesla loses 420 or Nvidia loses 134, they both look like dog shit to the downside. Like Nvidia's got just open highways all the way down to like 120 if it can't hold these current levels. And then Tesla down to like 370, 350. It's a pretty big fucking drop from where it's sitting.
Yeah, I was gonna say that's pretty wild.
Yep.
You know what that
Yeah.
means for their market cap of the S&P 500 too.
I
Like,
mean,
unless there's a serious rotation, right?
Well, everybody's rotating the wrong way. They're rotating into the Mag 7. I don't know. So I guess I'm just looking at like how much delta is on the chain for Tesla and Nvidia, and they're both basically like max bullish
yeah, well, all
delta.
their deltas in the money,
Right.
that's kind of like, but that's not very bullish, right? Like you can
Sure.
leverage gamma from that point to move the price up, but
Charm a
it
little
also
bit.
tells you like buyers don't want to buy it higher for longer.
Yeah. I mean, that's true of the whole market. That's why I've been
Yeah.
looking at leverage for puts and calls, and how leverage on calls has been consistently dropping, since like mid-year.
Tesla's
Uh,
very erratic. So there's a tiny bit of baby support at like 410. I wrote it up earlier in the stream. You can go back and screenshot it if you want my take on Tesla, but I would probably confirm at like 410, and then if it lost 410, I might go short. But
Wait, Gert, can I do
frankly, I
something
don't
really
want to play
quick?
it. Yeah, what's
Or
up?
actually, no. Sorry. I just was. I'm looking something up really quick.
I just
I'm
ran
making a
like
chart.
20 stocks through Gamma Strike for everybody.
Uh, okay.
You're such a shill.
I know.
Of course you would use your own service
I
and not
mean,
another one.
I told Nuke this the other day, and I think I mentioned it to you guys, but I'm not sure. I don't have any other services left. With the implementation of live data, I've gotten rid of all my subscriptions.
What was the cost of all the subscriptions that you got rid of? I'm just trying to figure out how much to milk these pores for.
It was like $980 a month.
No, come on.
Yeah,
There's not even $980 worth of services out there.
yeah, there are.
Oh my god. Where were you?
all right.
Were you signed up to the Wizard of Vol?
Oh God, no.
All right,
Sorry, I
Gert,
should
check
I
the
should stop giving free advertising out to competitors.
here, Gert. I put a little charty poo in Dick chat.
Oh,
You should
cool.
share this with everybody. This is a very interesting chart. Check out what happened to the yield curve after the Fed cut. Right, red is pre-cut, blue is
Chart
post-cut.
a little charty poo in Dick Chat. We're never going on it CNBC.
I would beg to differ.
Look at this thing,
We're the
dude.
future
Look
of
at
the
this.
options market.
Look at this. Look at this chonker of a bear steepener, dude. This is
Oh my
crazy.
god, you
Wow,
just wanted
this
to say
is
steepener. I'm
Well,
leaving.
just look at it, dude. Look at this thing. This is nuts. We're
it really
de-inverting, man. It's
is. Yeah.
happening. Like this shit's going down now. Like, no, I don't mean stocks. I mean just events are happening now. This is cool. Like, I think this is why vol went up so much, more so than the cut itself. There was the hawkish dot plot, which pushed the middle end of the curve, like the 5-year, up a lot. But the
Hawkish
long end going up as
ease.
much as it did, the long end going up as much as it did is the surprising part here.
Yeah.
Is it?
Yeah,
Well,
I mean
no.
it's about
We expected
4.7%, dude.
this. Yeah,
Yeah, no,
let's
I just mean like the
yeah.
market reaction.
Yeah,
2 days before it happened, I literally said this was going to happen, and then it happened.
I know what you mean, Jay Fresh, but it's the market reacting like we sort of expected from this is the interesting part, right? Because you would expect that people wouldn't pile, out of the long end of the curve, like at the very, very long end of the curve like that. Yeah, you would have expected to stay somewhere around 4.6, but definitely wasn't the case. So
Ask
that
him.
was
No,
interesting.
I expected it to go up because I mean people are gonna say, "Hey, I need yield somewhere," and you just rug pulled all my yield at the front end, so I got it demanded at the back end.
Yep.
But then where'd the money go is my question. It had to go all into short end, I guess.
Yeah.
I'm trying to is like because it didn't go into stocks clearly, unless it went into puts, which it didn't.
Well, I mean the money doesn't go anywhere. The money sits at a bank,
Well, when you're talking about treasuries, the money does go somewhere.
Ask him
not on
about
the
his
resale
Equinox
market.
membership. My Equinox membership is only $415 a month.
What is Equinox?
It's my gym that I don't go to.
$450 a month for a gym? What
Yeah.
do they have? Happy endings there?
Got a free smoothie bar.
Oh. Sounds free.
Yeah.
Yeah. So I mean, it's a little bit paradoxical because with the bond market, and the issue is that, and we've talked about this before, but I guess we'll just lay into it a little bit here again. The issue is that everybody's operating on a low debt framework where the government deficit is a small fraction of the total economic output. But when the money is being primarily made by the government and not by the banks, then you're going to have this issue where you're making money as fast as you are selling bonds, right? And there's a rate at which people can earn this money to then buy bonds, and if those bonds don't return enough, then you're constantly, the net effect is that bonds will suck up cash into the treasury, and people, the bond buyers demand a return on the money that's going in. So every year right now at current rates, they're buying, $2 trillion worth of bonds, and they're getting 1 trillion back in cash. So their, accounts are dropping by 1 trillion. Now the other side of that that's supposed to make that whole is the banks, generating more money on their own as well, right? As they extend credit and other things, but the banks aren't extending any credit. So you have this situation where the government just keeps spending money and selling bonds, and it's the people who are investing in the bonds are not necessarily the same people who are earning the money, and so you get this drain. And that drain, and so more spending equals higher deficits, regardless of what the Fed does, right? And so by the Fed raising rates, the Fed was actually easing by raising rates because people could get the yield that they needed from all of this massive debt issuance without any long term risk on duration, right? Assuming that they weren't already in it, right? So as they buy more, they could buy low duration, right? So they're not locking in these prices, but they're not taking on any extra risk, right? And then of course, the Treasury says, I'm more than willing to, oblige this opportunity, and I'll just issue all of my debt at this high yield with no duration risk for the buyers of the debt. And so everybody's just buying all this debt and getting all these interest payments, and everybody's happy. And so now the Fed is rug pulling that, right? They're saying, okay, we're not going to give you all this cash for no risk free, so we're taking this away. And so now everybody's saying, well, if I'm going to buy your bonds, I need a return somewhere. And if you're not going to give it to me at the overnight or short rates, then I'm going to demand it everywhere else if you want me to buy it. And so
Yeah,
the Fed is actually
we should really talk
tightening
about
by.
the effect of them cutting the repo rate back.
Yeah, that's another interesting one too, because we could talk about that in a second. I'm almost done, I
Yeah.
promise. I know I run my mouth, but okay. So Fed dropping rates is tightening,
Yes.
not yes. Okay.
Yeah.
The other part of this that is sort of paradoxical is that in this high debt environment, um, rates will go in the opposite direction based on economic, at least according to my theory that this is all based on, is that economic growth is inversely proportional to rates, which is not the way that people traditionally think about bonds, right? If the economy is strong, then rates should be high to reflect that growth, right? That's traditionally how people think about it. And if the economy is bad, then we lower rates to try to goose the market. And so rates should be low if the economy is bad to get things going. But in a high debt environment, right? We go back to this demand for return on the bonds at the rate that they have to buy them. The less that the banks print privately to buy the growth in debt, the more that people have to dig into their existing coffers to buy this debt, right? And so the more that they'll demand a higher rate. So as the economy declines, the rates should rise, which is the exact opposite of what people expect. Conversely, if the economy does very well, then rates should drop.
Because of the deficit situation.
This is kind of like when people say we have to grow our way out of the deficit. This is the mechanism by which this happens, right? If the private sector grows faster than the deficit, then the money supply grows fast enough to absorb the deficit without demanding much return on risk, right? Because, I mean, this all comes from the same just net rate balance of money goes in to buy debt, money comes out as payment for buying the debt, right? That all comes out of that one balance.
Right.
But anyway, yeah. So that's what I'm looking for right now. This is the curious thing that I haven't quite figured out. Some people in the chat offered some interesting suggestions the last week or so, but I haven't asked you about this, Gert, because I'm a little, just obviously I've got a lot going on. But M2 has been going up for most of this year, but bank lending hasn't increased. And I actually sat there on Fred for a while and looked up all the different types of bank lending to try to figure out why is M2 going up, and all the bank lendings are flat. They're just completely flat. And so I'm not entirely sure why M2 is rising.
Well, it's because rates are going up, on term rates for consumers and small businesses. As businesses refinance their debt, right, over the last year, lending standards have tightened, meaning that their rates have gone up. So anyone who has taken out any sort of a loan over the last year is paying a higher interest rate than they were a year prior.
I think the most interesting reasons for increases in M2 are I answered you, I think, in the Discord when you asked me this, but maybe you didn't get a chance to see it.
Maybe I forgot. Yeah.
Yeah. I mean, you have interest on reserves, right? So there's a effect of the Fed easing that reduces reserve requirements. And so you'll get a drawdown in reserves, and that will be added to M2. And I don't know if the shift in M2 you're seeing is around 200, 300 billion, but that could be coming from reserves. Also,
Okay. Yeah.
a slowdown in velocity might lead to more money getting parked in M2 designated categories.
Don't say that. Well, I mean, because velocity hasn't really
slowed down.
It
Yeah,
hasn't come down. It's flattened, it's decelerated, but it hasn't.
Yeah,
down.
well, when velocity tends to come down all at once, it doesn't. It's usually a very violent kind
and
of
it's
scenario.
an imputed value, right? It's a derived value. It's not it's not a fundamental measure. What they measure is total economic output and total money, and then they determine the velocity from that.
I would also, and then lastly, I would say foreign bond buying, or foreign investment in U.S. assets would be the third thing that I could providing flat lending. We have money coming into U.S. money markets and stuff from foreign investors, which, I mean, if you look at the auctions, it's all indirect, right? The prime lenders aren't coming to bat for these fucking yields. They don't want them. Which leads back to what you were saying about how they're going to demand. And this is I think earlier this year, you know, there was a lot of discussion around like bond vigilantes, right? And this is
I
basically,
hate that term.
I do too, but this is basically the prime lenders coming to the auctions and be like, nope, we're not going to buy that shit. We want more, right? And they're only buying the absolute minimum required, and then
To stay on
they're
the
off,
yeah,
and then
because
they're
they have to.
offloading them immediately, right? So they're just pushing those yields up and up and up by their inaction at the auctions and by their sales, continuing sales of those bonds, even when forced to buy them. And what you know, and so the only people you really see coming in to buy these auctions are foreign investors, and they're the ones, you know, that are making up the majority of a lot of these like longer duration auctions, and that's because they're getting a huge gain on their currency versus the dollar, because the dollar is just skyrocketing against all these other currencies, and so they have a really vested interest in being long the dollar, but nobody in the US does. And so the prime lenders are forcing the rates higher, and as we force, you know, rates higher, that brings in more foreign investment flows, because they're going to want to get on board as those rates and the dollar move up.
Yeah, yeah. No, that makes a lot of sense. That's not
So I think that
super
might be where you're
super
seeing
great.
it.
Yeah, that could be for sure.
Yeesh.
Yeah. And for those who don't know, the prime lenders are basically the banks that get direct access to the Fed, get all
Yeah,
the best rates, and in return, they get a gun held to their head and said, "You are the buyer of last resort. If you don't buy enough of these unwanted things, then you don't get to be prime anymore."
pretty much. Yep.
So
They
they,
have to they
yeah,
have to sustain in order to have the ability to price the market, they have to provide the liquidity for the market, just like an MM. And you can think of it
yeah,
just like a
yeah,
market maker. That probably makes it a lot easier to
Well, they
understand.
usually are market makers too.
Some
yeah.
frequently, yeah, a lot of large market makers, not too many of them, but a lot of them have
Like
are
JPM
also
is a
prime
market maker
lenders.
and they're a fucking prime,
Yeah.
right?
Well, JPM's only really been in the market making business for like a little while now. They're not they're far they're still really far from like Citadel, Virtu, Goldman.
Oh, dude, but like being a prime and a market maker though has got to yield some serious advantages.
Oh, of course.
Like you have access to so much more leverage at such more favorable terms.
Unless
Like
something like last Thursday happens and you all of a sudden have to hedge all the row on your entire fucking book 2 years out.
that was crazy. And it's funny because like, and that's why like the chart I shared, right? Like you're actually kind of, and that's I think why volatility expanded so much was that the premium demanded purely because of row changed so quickly. Like it's crazy.
Yeah,
It's
we don't
crazy what
we don't
happened in the
we
options
don't we
market.
don't think a lot about interest rate projections as they are perceived by Fed fund futures and the swaps market, but the pricing in of those interest rate projections is very, very significant. Like
Oh
as
Which
yeah,
is
as
just,
those
which is just,
markets hedge, the amount of money moving around is huge. I mean, you're talking
which is
like
just silly.
hundreds of trillions of dollars in derivative leverage.
yeah. It's insane. The interconnectedness of the financial markets in those ways, like everything is a derivative of another thing, is a derivative of another thing. It's
You're a
incredible.
derivative.
Whoa, 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 whoa. Look, I may be basic, but derivative? Eat shit.
We have a couple questions from chat here. This one's kind of interesting. Also, for SPX, why would people hold on to sold calls that go in the money? I get that the MM is hedging those, but why wouldn't sellers close them after getting blown up? Well, frequently they're spreads, so they have a fixed
Yeah,
loss. And then
frequently they're
also,
spreads, but in general, they're just pieces of larger positions, right? You have to know what their whole portfolio is. They're usually hedges and spreads and things. Yeah.
Well, not just that. They have theta. So they're willing to take, you know, a drawdown over time in order to realize those returns later. Like sold options can be moved, they can be rolled, they can there's a lot of management that goes on. Um and I mean it's like the JPM collar, right? Like it just sits there like a big fucking turd on the SPX
Yeah, but
options chain.
they hedge that above it.
Yeah, they do. They hedge above, which actually is bullish. The above hedging is bullish, and the lack of hedging underneath
Yep.
it is slightly bearish. And it also depends on when it gets tested relative to its expiration. It can get like really violently rejected if it's very close to its expiration because the market maker simply doesn't have to hedge shit above it. They just start dumping their hedge. Um, and so yeah, I mean, there's a lot of dynamics with those positions, but yeah, I mean, they have theta. I mean, I frequently have short options that are in the money somewhere, and I don't care. Like, I just add more time to them until they're not in the money. So, like, on an
Yeah.
individual investor level, it's really hard because obviously that ties up a ton of capital, but that capital is not gone just because it got blown up. And this is something that we've seen really frequently over the last year with all of the short puts falling into the money and then them bouncing right back out again and getting saved.
Yep.
Like leaving all of that delta on the chain is really advantageous for the bulls because it makes it far easier to drive the price back up again. If that isn't there to support the price movement up, like the situation we're facing coming into this next week, that's actually a really bad position for bulls to be in because then they have to either leverage up more, which really isn't possible right now, and then try to get that back in the money. And if they close those, the market just goes down like a rock. So if they start
Oh yeah.
eating the
Crash.
losses, you watch vol like that's what happened when like yen spiked and the Nikkei did the flash crash was people actually started closing shit. And that's why the spreads blew out on VIX. And you saw VIX like go to 70 even though it really didn't.
It
Was
went
because
down
people were
defined.
like, fuck this, and they actually closed some short vol. That's what happens when people actually close those positions.
Yeah, that
Yeah.
was awesome.
And we got a little bit
I
of that Thursday. We got a little bit of like,
A
fuck
little bit.
this.
It was
Yeah.
still pretty controlled on the way down, though. It wasn't like
Shockingly, despite the fact that we dropped 300 points in like a quarter of a session,
yeah, yeah.
it was actually still fairly. There just wasn't a lot once we were past 6,000.
It's just so crazy how this has been going on for so long that people's mindsets and expectations of the market have just been totally skewed.
Yeah.
People started freaking out about like how like, oh, the market was so frothy it needed this big correction to let some froth off the top. It's like it didn't even correct.
Yeah.
Like the meme 7 hardly went down at all. And then it like shot right back up.
Well, that's
Like
the only
there's
thing
no
anybody owns now. So that's when they say
and
the
like
market, they're actually just referring to those 7 stocks in their portfolio.
and then like I mean, we used to see 1% moves commonly, and now they almost never happen. At least downward. But like volatility used to be normal.
Yeah. Well, I
Well, it
mean,
depends
that's
on what you
because
consider normal volatility.
zero DTs are so heavily sold.
Yeah, true.
Yeah.
Most of our volatility is occurring outside of the market.
It's mostly occurring
Market
in
hours.
equities and yeah, and other assets. Quick question about boxing spreads. Can you always box them, even if you're losing on the original spread to come out with a smaller loss? Yeah. Why don't people box more often? They don't need to. And boxing is generally a way to like avoid well, it's usually a way to either take profits or avoid taking a larger loss than needed. Um, but if like you don't need to use it to take profits if you have like a day trade approved account, like if you're over $25,000 in margin, you can just close your spreads. There's no reason to box them. So it's like a shitty trick used for people who don't have enough capital to meet the margin requirements. Mostly. And then boxes are taken in size by major institutions as a way to get a loan.
The SEC hates this one weird trick.
Like you can create like an in the money like box spread, and you're effectively borrowing money at the current rate.
Yeah, it's. I mean, the thing is we've kind of created this environment, right? I mean, the Fed kind of did by doing what they did, raising rates with such economic growth and with the AI craze going on. Like to seek
Yeah, I mean,
out.
all of this has been this environment has been festered over what, almost 20 years now, like 15 years at least.
Yeah. Oh, I think honestly for 25 years. I mean, the Greenspan put was kind of the start of this.
Yeah.
Yeah.
So like, but it did. But the thing was back then, right? It's kind of one of those things where like you're like the frog in the pot of water, right? We didn't know what we were doing, and because it was just working, right? And because the system hadn't gotten so engorged with fake money, whereas now, it is we are fully turgid with cash.
Turgid.
JFresh, can you guys compare the pricing of individual options compared to the index options? Because wouldn't there be some options that are overpriced compared to the index or underpriced compared to? I mean,
What is
correlation
hold
kind
on.
of does that for you, like the core 1 and 3 month indexes. If you're looking at like dispersion,
Yeah, but what does that mean, like underpriced relative to the index?
I guess he's asking if there's like stocks that aren't being leveraged for dispersion that so like that's more like relative to other underlying equities than it is
Yeah,
relative
I
to
mean,
the
okay,
index.
so generally, when people are doing a dispersion trade, they don't use like the whole, for example, the S&P 500, they don't use all 500 stocks to create their dispersion basket. They pick like the top X percent of stocks, which or X percent of market cap, which would be, maybe they'll pick the top 20 or 30 stocks, right? Which will
Or they'll
represent
pick
upwards of,
stocks in a specific sector.
yeah, sometimes, yeah. So they'll do the sectors. All they like, okay, well, I could get Shell. I don't need all the other ones, right? Yeah, they're
Like
all doing
KRE,
roughly
we saw a
two.
big uptick in dispersion in financials with the election.
Yeah, so they'll do a little bit of that. So they're working with a much smaller basket. Um, and then, the question of whether it's over or under price of the index. I mean, the index is the basket of options. Seeing in the correlation between the two. I don't know how often that happens.
I feel like it probably resolves quickly,
Yeah.
but if there's anything we've learned, it's that markets are far from efficient.
Yeah, that's true. I mean, problem is that it's just a really sophisticated thing. I'm sure at some point we'll get to the point where we're tracking that, but you're talking about such a massive amount of data and
Well, it's a
to do it.
Mandela effect, right? Like the more you dig, the more you fucking run into crazy shit. And market like the reason why markets are not as efficient as they could be is because of this desire for outperformance
Yeah.
and greed. I mean, you could kind of say in general, but like I mean that's a good thing to have some greed, but inefficiency is something we should just accept, right? And at this point, yeah, it is insane to what levels of detail the market, observes itself.
Yeah, don't get me started on my efficiency and illiquidity definitions, because I think everybody's got it completely backwards. I don't think anybody's ready to hear that rant.
I've heard the liquidity rants. I feel like you've stumbled upon a thing that's existed for a long time, but there's I know what I kind of know what you're talking about.
Suffice it to say, the primary function of the market is to take all of our disagreements over price and turn that into returns for the people who run the market, right? The more we disagree, the more money they make.
Yep.
Yeah, I mean the market, the money the most money that is made from the market is made from fees.
Yeah. Not only disagreeing with each other, but disagreeing with ourselves over time. So this is like
That just means more variance, which means more fees and more volume.
this is right. This is like what Kramer is, right? Jim Cramer, his job is to go out there one day and say, Nvidia is a buy. And then 2 weeks later, his job is to go out there and say, I'm a little worried about some of the fundamentals of Nvidia right now. It's a sell.
Yep.
Because his job is to create the largest variance in the price that we price things at, and to create the most volatility in our own pricing over time.
That's why markets love Trump.
Yeah.
Yeah, because Trump creates a
She's
lot
all
of
over the
variance. Yep. Is there any significance to VN crossing over GM or vice versa? On what?
We're not sure.
In general, I mean,
about this all the time.
Well, so
I've thought
general,
about this a
right?
lot, but on individual equities, you rarely ever see it. On indexes, yes, I think it's important. It's showing that short vol is shifting to the opposite side of the like if you have VN on SPX rising above gamma max, short vol is becoming entrenched on the sold call side. That's a generally true statement about it. And if short vol is becoming entrenched on the short put side, VN will pull back towards spot really, really quickly, but not, and so generally under gamma max.
I will just say I really don't like the direction that the Sunday stream is taking, where we care about what people want us to talk about.
Oh, I'm sorry.
When did we start taking questions?
Literally just now. I mean, there were some good questions.
No, that's fine. I'm just saying.
I mean, anything that just interrupts your fucking rant.
Do you want me to rant about Copilot?
Oh God, no. No, I'm
not.
Oh
yeah, JFresh was.
My mouth hurts too much to talk about AI. I'm not gonna waste my
JFresh was trying
to
use it, and it was funny.
I couldn't have asked it a simpler question. It gave me a completely non-functional answer that would have wasted 5 hours of my time.
I was watching this episode of, I don't know if you've ever seen this show. It's called That Mitchell and Webb Look. It's like a British skit comedy from early 2000s, late 90s. And they're these two television writers, right? And they're trying to make a British underdog story that's sports based, and they're trying to use Clippy to make it. and the suggestions it's giving them sound just like AI.
Can you find that? Where did you watch it?
I can send you the episode.
Yeah.
And they end up making a movie. They end up making a movie about cricket. And no one understands what the fuck is going on.
I love British humor.
Me too.
So ridiculous. Nobody ever expects the Spanish Inquisition.
I will send you that episode.
Please do.
I will. So.
Yeah, there's not much else to talk about. I mean, it's Christmas. You guys go and enjoy your holidays. I'm just going to keep saying it. 5,900 end of year.
We're getting really close to the end of the year, and we're getting really close to just being at 5,900. So
Yeah.
I don't actually disagree. I didn't, as a matter of fact. Although I'm really happy that my end of week projection ended up kind of close. I know we didn't have a stream last week, but I'm like 3 for 3 on these fucking things right now.
All right. You keep on tooting your horn.
Yeah, well, it's going nice. It's going. I'm just getting more and more confident with using our data, and it's turning me into a
There's the
monster.
shilling our system again.
Listen, it's fucking dope. All right.
It is
I don't
dope.
care. I don't like, and I'll tell you this again. I don't care if we never have a single customer. I will just pay to keep this fucking thing alive because I love it.
I kind of love it too. Well, now I'm getting my grubby mitts actually into the source code of the live product, so
Oh,
you better
great. So
watch
you're gonna
out.
just fuck it all up.
Yeah, I've already. I mean, okay. I will just say I've gone through all of Dork's code that he wrote for the backends, and there are definitely fewer than 1,000 variables. He could just name everything with 3 characters.
You fucker. You fucker. Are you fucking kidding me?
I
Like,
can't wait
I
for
got
our
this is
two
like,
wildly inexperienced Python devs to just start building stuff.
we got this function called get historical end of day prices for ticker at date. Like, just call it AA2.
I wonder if Dork will be like a full stack Python guy by the time we're able to afford a Python guy.
I'm pretty much there, group.
He's pretty close. Although, yeah, it's getting there. He's no
It's a
nuke.
lot of work. Oh yeah, I'll never be nuke.
Yeah, that was a big growth a growth journey for you to realize that you'll never be nuke, and that's okay.
Honestly,
Just like I will never love you like a father.
No, he's not ready to accept that yet. Hold on. That's like our one motivational tool. Don't pull that shit back.
oh my god.
You can be my son, Dork. It's okay.
Oh, Dad.
It's funny because he has an
But
actual dad.
only if you please me.
The problem is that
Dad?
the problem is, Dork, is that your dad is like just too proud of you.
Yeah, he's a great dude.
Well, that's the problem. He's too proud of you. He needs to be disappointed in you and at least aspects of you, which will create anxiety and longing and an emptiness that you'll want to fill by pleasing him.
This is how you breed successful children, by the way, people. Make them competitive with themselves, and then also things that they inherently cannot change about themselves. Very successful children.
Yeah.
Yeah, it's just
Neurotic,
it's
but
strange,
successful.
Yeah, obsessive.
Neurotic.
You mean?
I
Yeah.
feel like the neuroses is innate. The neuroses, to create a successful child, they must first be neurotic, and then you build upon that neuroses. Because, I mean, I feel like if you get a child that's just kind of like a lemon, it's like, no, it's cute and it has fun, but there's not a whole lot going on up there. Like, I don't know what you could do to manipulate them and to be successful.
Yeah, you gotta beat them down and build them up, right?
Yeah. This might backfire on me though, because me tearing you down is implicitly affirming that I think that there's something there to be built back up, which is a positive, which might make you feel good about yourself.
Hence destroying all the work you've done.
Wait, is this why people like domination? That's got to be different. They just are sick of making decisions, right?
I don't know.
They want somebody else to be in control because they're just exhausted from having to control everything. Right? I don't know. Are there any domination people in the pickle jar? There's got to be.
Yeah, pickle doms, raise your hand.
It's literally everybody. This whole fucking community is built on Findom.
Wait, are we the Findoms?
Yeah, just belittling people's rational decisions about the market.
Oh, good lord.
Glarp puts her calls.
Right.
Oh my
Oh,
god.
Jesus.
We're all Fin dominatrix. Dominatrix. What's the plural of dominatrix?
Uh,
I'm
I
gonna
don't
ask
know.
Copilot.
Why would you have more than one?
dominatrices?
Yeah. What is the plural of dominatrix? I'm afraid I can't talk about that topic. Sorry about that. What a worthless piece of shit. It's done nothing for me all day. Google would answer that question. Go into Google. Fuck it.
Do it.
It's even in their AI overview. The plural of dominatrix is dominatrices or dominatrixes.
Yeah, it's like Matrix. Dominatrix, yeah.
Well, there we
But not
go.
index. When it's math, it's indices. When it's stocks, it's indexes.
Oh God. Yeah, true. A younger me would have said, well, one group is smart and the other is stupid. And the older me realizes that the stupid people are the ones that create language because language is just what people use.
Yep.
So the smart people are really the ones that are doing it wrong.
Yeah, you know, I mean that's what happens after you smoke DMT.
That's why when every year when Webster's dictionary comes out with like the new words list, it's never like smart words. It's always just like really stupid words because the stupid people create the language.
Yeah. Well, I mean there is no stupid, right? There's just well, I mean I guess there is, but you just have to remember that everything exists on a bell curve and, you know, if you think about how stupid the average
Even that's stupid. You're assuming a normal distribution, and that makes me angry.
Oh, you think it's heavily skewed to the left?
It could. Why is there only? Why do you assume there's only one peak, or that there is a peak at all?
Or you think it's just flat?
It could be flat. It could be just bumpy.
Well, it depends on how you define
It
intelligence.
could be bimodal.
I mean, but the thing is, though, is most studies about like cognitive ability and all that stuff show a bell curve.
And most studies do what? They assume a bell curve and then apply that assumption to all of the outcomes of their measurements. They even create the measurements assuming that a bell curve will emerge.
Oh, I see what you're saying.
Yeah.
You son of a bitch. Well, just think
It's
about
all
this, Jay
circular
Fresh.
reasoning.
Oh, yeah.
Let's take it qualitatively, though. George Carlin put it the best. Think about how dumb the average person is, and remember that half of the people out there are dumber than them.
Yeah, but that's still fit. What I said still fits too, right?
It does, yes,
There's
it
no
does.
skew.
Yeah.
He's implying there's no skew. That's all.
He's just implying there's a mean.
Yeah.
Are we gonna do some projections on the SPX? Because my jaw is starting to hurt really bad.
Okay. 5,900 end of year. If I haven't
Yeah,
made that
no,
clear.
you don't need to do yours. Yours is already done.
Okay. Mine is. Oh God, you make it hard, Jay Fresh, because you're probably right now. Because
That's what
it's
she
within
said.
40 bips. You're a fucking son of a bitch. You know what? I'm gonna go with
5,901.
no. I'm gonna go with 60-20.
Ooh, I like that one
60-20 end of
actually.
week. Bear flag all week. 60-20 end of week.
I like
60,
that
20 end
actually.
a week.
Yeah.
Alright. I'm going the other way.
And Jay
a
Fresh is
little
still
bit.
right, but
I'm thinking 57 something end of year.
What?
Yeah.
You think some geopolitical shit's gonna go down or something?
Nope.
You just want everybody's Christmas to be ruined?
Yeah. Well, I mean, everybody who's long the market, because fuck those people.
Yeah, which is everybody. You just hate everyone. That's why I like you.
I really do. It's a problem.
It's not. I also hate everyone.
Yeah. In our hatred, we've found companionship.
It's a double negative. It works.
Yeah, there's nothing cooler than mutual hatred of things. That's what really makes a strong relationship. That's the bedrock.
Yeah.
It doesn't matter what you and your like significant other like. It just matters that you hate the same shit.
Yeah, that's why this trio works so well, because you and I both hate Dork.
I don't hate Dork.
Oh my god.
Dork needs us to like him.
Jesus Christ. Our psychological experimenting on Dork will be documented by somebody at some point.
Too far. I'm sorry, Dork. We do like him.
I'm glad I'm not very flappable because I would have had so many nervous breakdowns. Wait, what was your prediction, Kirk, for end of week?
So 57 something?
I've got 58.44 end of week.
Ooh. I like it, but
retest the prior low.
Oh, I need to pop the stream up so I can get your.
What's the catalyst for that?
I can post it if you want. I can do it right here.
I got it.
What's
I have no idea. I didn't even look at what the data is this week. Let's see.
You just think it's gonna
durable
just
goods.
fall?
There you go. Tuesday, durable goods.
You just pick one.
That's how it's done, man. Haven't you been? How long have you been doing this now?
I'm looking at the trading economics on the economic calendar, and all I see is just a list of bullish announcements that are going to be happening for the next year. All data is bullish.
We got a 2-year note auction on Monday. That's what's going to start to get people a little queasy. And then durable goods is going to come in positive, and everyone's going to be like, fuck, our PCE predictions were wrong. And then down for the rest of the week.
Ooh, new home sales. That'll actually be interesting. More
there.
money. Oh,
boom.
Another M2 print. Ooh,
Thesis.
I like that.
You think I didn't have to make this shit up before the morning desk? Piss drunk. I was still drunk and I could make this stuff up. But yeah, durable goods sounds
You're talented.
Good. I know.
You know what, Greg? You know what you sound like is musicians, right?
Mm-hmm.
A good musician, generally, well, maybe not a good musician, but most musicians who've played in bars can play their music really good while they're drunk.
Yeah.
You're like that, but with stonks.
Yeah. Oh, my drunk pickles picks are a gift to the jar. Because I just throw away all my risk management when I'm drunk. During the early parts of the pandemic, I tried day trading drunk like a bunch, and it went phenomenally. But the risk I was taking was scary.
Like looking back on it sober, you're like looking at your trade history, you're like, holy shit.
Yeah. I think there was one day. There was one day and I think it was November of 2022 or 2020, and I was long 100 contracts on SPX and just shit faced. They weren't even at the money. They were pretty far out of the money.
If I had known you back then, I would have fucking bitch slapped you.
Well, you can't. The benefit I have is that you still can't bitch slap me. Ooh, this is making me want to blow the port up again.
Fuck you. No, don't do it. Don't do it.
All right. Well, I'm peeking at some of the stuff that Nuke and other devs are working on right now, and I would like to go enjoy this chub in private.
Oh, okay. All right, you're just gonna go wank off to the data they're building.
We're cooking. We're cooking with gas.
Ooh,
Yeah,
that's
I got
Oh my god.
I
that's.
have
I feel like we've been
I have
cooking
some
with
stuff to show you
those
too.
like little cans that they put under catering dishes for the last like 3 months, and now we need to actually switch to a higher energy fuel.
It's happened. It's clearly happened.
Check
Yeah.
DM Fresh.
Check DMs. Hold on, I gotta get rid of your stupid steepener plot first.
Well, the pain meds do the same thing, only if I mix them with alcohol.
Ooh, look at that. That's why Dork hasn't
Yeah.
been saying anything. He's been coding again on the stream.
Oh, you bastard! Why? Where's my DM? What the fuck?
You're gonna be so bored by it.
It's a DM of
I
a
would-
bunch of dates in an array.
Yeah. I just I did a cyber circle jerk.
Yeah, this is
And it's
boring.
really
Why would you show
exciting.
me this?
Asshole.
I'm
Well-
currently hooking up an additional service provider. I want us to get 10 years of historical data.
I want us to have
really...
redundancy on the overnight data.
Well, we're
Oh wait, we didn't get to talk about the crime on Friday.
Oh shit!
And also simultaneously brag about how
crime.
great our data platform is.
Yeah, only us and Bloomberg saw it.
Yeah. Only two people that registered the trade were us and Bloomberg. But somebody had sold 75,000 fucking contracts at the 6,000 or the 5,900 strike on Friday during the trading session. After the market maker hedged those contracts, the trade was canceled. And it was responsible for a pretty significant majority of our upside price action.
Yeah, that was wild.
So if you guys remember when we broke through the 880 synthetic short, yeah, an order was placed for puts. It's 75,000 size order for 0 DTE puts at 5,900. And then by the time we hit 5,970, the order was canceled.
That's so wild.
Yeah. And it didn't show up in any of the
can't cancel
brokers.
trades.
It didn't show up in any of the brokerages. The only place it showed up was apparently Bloomberg and our data. Now, is that our fault because we didn't put in an error check for canceled orders? Maybe. But it's also
That's
really
still
cool.
crazy. That's the first time
Yeah,
we've
well,
seen that so far.
We can just cancel trades? No, not you.
Get out of here.
But other people. Other people with big money. Yeah.
Well, especially 70,000 contracts. That's a lot.
Yeah. Someone fat fingered that 0.
Right, yeah, it's no slim pickings.
And yeah, in the event of stuff like that, there's ways to roll them back.
You make a phone call, be like,
however,
guys.
they did roll it back after the market maker, after the fucking market maker had already hedged the contracts.
Yeah.
Holy shit, Danimal in the YouTube chat? What's happening? You can close your Robinhood account. That's true, yeah. You can also move to a country with no extradition. Was that a test? Will they do it again? Probably not. But it was interesting. It was
that's pretty rare.
Yeah, it's definitely exceedingly rare. But it was still a driver of a lot of price action, regardless. Because that meant every dealer saw that, hit the tape, and was like, oh fuck. Right? Like it's a big enough order to significantly impact the way people are trading. Right? We were trading at like 58.80 and the spot market was like dead. There was nothing coming in to like the up or downside. There was a synth short at 880 and then everything just blew the fuck up. And it was, because of that order. Like, so the 880 cent short pulled back, that allowed price to move up. Then that triggered, the bid to cover on the side as the short put started to go in the money. And then, and so the damage was already done.
Yep.
Spoofing
Yeah, a
is a
bunch of
form of
algos see
market
that come in.
manipulation that occurs when a trader places a bid or offer with the intent to cancel before execution, thereby creating an untrue picture of actual demand for or supply. Yep. I mean, effectively, even though it was an approved canceled transaction by SIBO, effectively it was still spoofing. So the market got spoofed up to 59.80, from which it failed. 50...
No, Kirk, it's not spoofing. It's systemically enabled spoofing.
Okay, well, yeah, regulatorily allowed spoofing is still spoofing.
But it's regulatorily allowed, so it's legal, so it's not spoofing.
Well,
you're spoofing.
But it is.
I am.
Well, just because the being illegal is not is not what defines spoofing. Spoofing is just a form of market manipulation, which we have made illegal, generally.
But only for specific people.
Yeah, for poor people. Poor people or like not very wealthy, high frequency traders.
Yeah, I was about to say any fund that is less than 100 million.
Any fund without an ISDA.
Okay, so yeah, any fund less than 2 billion or $1 billion.
Yeah.
Okay.
Well, now I'm coding on stream.
Isn't that what the Nvidia kid got arrested for? I think so. Yeah. There've been a lot of like criminal attempts at spoofing in markets. It still goes on BTC, like a lot. BTC is a huge market for because there's really no regulation for it.
Yep.
So an interesting thing to go into this week with, knowing that the bullishness on Friday was fake. We'll see how the rest of the week goes. Some things about my schedule this week. I am going out to California for the holidays, so for Christmas Eve, fuck the half day. I'm not gonna be here. I hate half days anyway. But I'll be back.
Dirk?
I'll be back following Christmas. What's up?
I'm gonna DM you because
you're gonna be in California.
I live right next to the state. It just depends on where you're going.
way deep in SoCal.
Okay, yeah,
so
fuck
like
that.
700 miles away from you.
Get a connecting flight back into Reno and let's get fucking hammered at the GSR.
Just get drunk at the airport on $10 half alcohol content margaritas at TGI Fridays.
Oh, dude, yeah, let's get you.
You're gonna have
another one.
You're gonna have to buy them because if they scan my ID, they'll throw me out.
I'm fine with that. Drinks are on me.
Coastal airports have been fogged in like crazy in SoCal. Yeah, I know. It was a bitch to get a flight out there.
Yeah,
but if I fly private out, I should be able to get pretty close to where I need to be.
Fucking private flights. What are you, some sort of rich guy?
I mean, they're not that expensive. Like, I was looking at them. Always on the holidays, like if you can catch the whatever they call it, where they're like moving the plane. Like if you can catch those near the holidays, they're always like half the price of like business class, because like the business class tickets are like $3,000 right now to fly anywhere because it's so close to Christmas. So it's like, but it's like $2,500 to like share a private jet with some other weirdo.
That's awesome. Well, there's people who are going to be going to Lake Tahoe for their post-Christmas festivities. I'm sure you could do your fucking private jet hobo action on one of those. Let's fucking get hammered.
Maybe. I'll see if I can make it happen.
That'd be cool, dude. Yeah, we could hang out and you could see my pitiful tiny house and my my yurt.
Oh,
Making
speaking of which,
CPOs.
I'm about to not have a house very soon. I got a cash offer, which is going to be hard to turn down.
Nice.
Yep. So I'm going to be homeless once again.
Fucking A.
And it's like 5% above market. So I think I just want to take it.
I mean, yeah. It's
What do you?
I was hoping I could finance the buyer and get like 6% extra out of them. But this works too.
Yeah.
Yeah. What are you gonna do? Or did you factor in all? How did you factor in the future revenues of the shrimp farm into the price of the house?
I didn't. Yeah, he's getting the shrimp farm gratis. We'll see what he does
That's
with
a
it.
great
Yeah.
deal.
I know. Well, for
That's a
him.
great deal. All right. Well, Merry Christmas.
Merry
assholes.
Christmas,
Merry
guys.
Christmas, you filthy animals.
Happy holidays, everyone. Thanks for tuning in. You guys, thanks for coming on. As always,
Thanks
appreciated.
for having us, bud.
Yeah.
Yep. Till we meet again.
Later.
Later, bud.